Hello everyone, my name is Koromane Koroye, and you're on to The Next Wave by Tech About. In today's episode, we'll be speaking about agent networks. Across the continent, digital services have become an important aspect of daily life, from e-commerce to payments. Today, we'll be speaking on how these services get to remote locations through a human interface, thereby making them available to underserved and underreached market segments. Not only will we talk about the work of agent networks in making digital services accessible to unreachable and undeserved segments of the population across Africa, but we'll also explore the future opportunities agent networks can bring to Africa's tech ecosystem. Joining me to discuss this today are Dare Okoju, founder and CEO of MFS Africa, the largest mobile money interoperability hub in Africa, and
Sam Shapate, the CEO and founder of Kapu.
Thank you both for joining us today. Hi, Dare. Welcome to the show. I'd like to start with you and ask more about your business and how you've been able to build one of the most connected super agent networks on the continent.
Sure. So MFS Africa, we typically describe it as a network of networks of digital payments across Africa. What that means is we exist on top of existing digital payment schemes in different countries on the continent, the likes of M-Pesa in Kenya, MTN Mobile Money in Ghana, Orange Money in Burkina Faso, Airtel Money in Uganda. We have, over the years, managed to connect all this into one seamless network across the continent, which today allows people picking up their phone in Kenya using M-Pesa, sending money to someone on MTN in Uganda, or picking up their phone on Move in Togo, sending money to Airtel in Niger, for instance. So it allows cross-border payment intra-Africa, and the more of those schemes we add into new countries, the bigger and the more useful the network becomes. We have also been able to diversify it also outside of just mobile money. So we connect bank accounts as well, and we connect it to the rest of the world. So now it's possible through partnership with a money transfer company to allow someone in the US to use Zoom PayPal, for instance, and send money to someone in Zambia on MTN. The reverse is also increasingly possible. So we support companies like Spotify, like Google, Facebook to collect payment from African consumers or businesses. Last but not least, and you're probably aware of this, we have now ventured into what we call offline merchants, starting with Nigeria, where we acquired Baxi last year with about 90,000 of those merchants, which we are growing to about 200,000 by the end of this year. We are connecting them to the network, which then start connecting the kind of online to the offline agent network. Starting in Nigeria, it's something we intend to replicate across the continent. Company started about in 2010, so almost 12 years ago. I started it after a stint at MTN, where I was responsible for building what is now MTN Mobile Money. I'm a telecom engineer by background, and a lot of the mental model we use as MFS Africa to design and operate the network comes from the telecom world, which is the best network of networks we know.
That's a really good point. Thank you so much for sharing your thoughts, Dare. The agent network renaissance is much talked about across the continent. It's the reason behind the explosive growth of mobile money and digital financial services in Africa. In your own opinion, Dare, what are the factors that have made agent networks such an important part of Africa's technology and digital ecosystem?
And I've been saying this since my MTN days. The mobile money is not about the mobile. Everybody focuses on the mobile. It's about the agents. And the reason for that is simple, is because by and large, African economies are cash. And by and large, money, as we know it in Africa, is stored in a cash form. People have cash. Fintech and digital finance and everything else assume that money is digital. So if I'm building a fintech company, in the US or in Singapore, in the UK, I'm not worrying about how money is going to move, because everybody gets paid into a bank account and then they move money digitally, and that just, It's a fair assumption to make. That's not true in Africa. People store money in cash format. That means before we can get into all the fancy fintech and digital things, you have to have this on-ramp, off-ramp mechanism, and you have to have it at scale. And though that's what the agents do, that's their function into the financial world in Africa. And that's kind of what banking assumed and call it bank branches until it became ATMs and so on. The only problem is in Africa, the cost structure was always prohibitive. So it was, bank never been, it has never been able collectively to provide the kind of ubiquity you need for that on-ramp, off-ramp, digitalization to really happen. Mobile networks about 10, 15 years ago figured out that the distribution that they have built that was already able to transact in digital value somehow when we move from scratch card to EVD, as they call it in Nigeria, and electronic distribution in general. That was the beginning of ability to actually move money from physical form into digital form. And the genius of mobile money, and which will probably be its biggest legacy, was to convert this network, which was highly ubiquitous, highly perverse almost everywhere across the continent, to convert this into some sort of agent network. That way we do the cash in, cash out. So why is it so important? Is it different from elsewhere? Not really. If you go to Southeast Asia, there is some sort of equivalent. It's probably more formal and probably more established agent that you'll find. Even if you go to the US, 7-Elevens, you're still finding those as point where financial transactions are happening. And a lot of those end up being the agent for the likes of Western Union and MoneyGram back in the days. And that's really, the role that they continue to play. The big difference in Africa, though, is, in about 10, 15 years, we moved from zero to about 5 million of those agents. And I'm excluding Nigeria from that. Whereas in 100 years of banking, I don't think we got to 200,000 branches. So with that ubiquity came the popularity of mobile money and ability now to move money into digital form. And from there on, everything is possible. Nigeria has followed a little different path, not really mobile money, but end up at the same place, which is the need for agents to digitalize cash. It's happening more at the service of banks today than it is happening at the service of mobile money. But the concept itself is fundamentally the same. And Nigeria agents, because they're using connected device most of the time, the POS, seems to us like the next version or the evolution of what we're seeing in Guinea Conakry, in Benin Republic, in Kenya, where the agents are still using, by and large, mobile phone and sometimes not even smartphone, just some sort of feature phone that they can use. So agents are that important in the Africa trajectory because money is largely still cash and you need that on-ramp, off-ramp. And it's because we've been able to get it right that we're actually seeing the explosion of fintech that we're seeing across the continent now.
It's interesting that you say that, Dari, because I do think super agents and agent networks have played such an important role in bringing cash and digital financial services into the hands of people who have been neglected by commercial banks and larger financial institutions. Thank you so much, Dari. Now, I'm glad that we're on the topic of financial services. There are definitely some lessons to be learned from the impact of agent networks in that sector. Considering that digital services extend beyond digital financial services and e-commerce, in your opinion, Dari, how do you think we can deploy the agent network to drive results in other digital service sectors as well?
Yeah, so the past gives us a sense of what can come. So if you look, who has been able to successfully build agent network in the last, I'll say from 2006 to 2018, mobile networks. Everybody else tried, but nobody managed to get to the scale that mobile networks have been able to do. What they've done in that process is also educate the market in that. So now a corner shop in any place across Africa, whether it's Lusaka, Kampala, Monrovia, understand the business of cash in, cash out. Nigeria, what we've seen and what we start seeing in Francophone West Africa with Wave, what we start seeing with players like OPay, we start seeing with players like PalmPay, is telling us that there might be other type of players who can build this at scale as well. So it no longer has to be the mobile networks. So we can follow a few trajectories from here. We can follow a trajectory of, I would say, interoperability and independent, like, Baxi Ease and few of the players in Nigeria, T-Maps, ESL and so on, where they will build the agent network at the service of everyone. Or we will continue to see some sort of closed loop service like the way the Wave is building, the one that MTN and Orange are building. My hypothesis is that we will increasingly see independent ones because the value for the agent itself, the merchant, that it's just going to be much bigger the more they can aggregate services.
Thank you so much, Dari, for sharing your thoughts with us. We cannot deny the impact that super agent networks have had in Africa's ecosystem, particularly in bringing much needed financial services and access to digital services to underserved and unreached parts of the ecosystem in Africa. Now we're going to speak to
You, Sam.
and talk about digital economies. If you look at most successful digital economies globally, there's little or no offline element or similar agent networks. Can we sustainably build Africa's digital economy using agent networks, in your own opinion?
Yeah, I think that the agent network model will work for a lot of tech-enabled businesses. There are different applications for different types of businesses. I think mobile money is a very easy use case to scale because it takes very little training. There's very little investment from an agent perspective, so it's easy to scale. Some of the banking players like Equity Bank in Kenya have gone for higher touch, more branded, more services models, which are sort of slower to scale and take more upfront investments. We are building at Kapu in the e-commerce sphere, leveraging agents to bring down the cost of goods in the grocery sphere. So I think there's lots of applications of the agent model, but they are not easy to build. They are expensive. They're expensive to build and they're expensive to maintain.
Your last point was a perfect segue into my next question, which is around what kind of infrastructure do we need to grow and to sustain existing agent networks in Africa?
I think there's a lot of expertise to build in agent networks. I think there is, which is number one, right? And then I think there is a cost. However, good you are, there's a real cost to building that out. And that's why I think over time there will be consolidation in that as well. I think it doesn't make sense for one agent to have to be an agent of 10 different companies with different apps and different use cases and advertising, etc. I think there will be consolidation into sort of super agent apps over time. I think it depends on the business that you're trying to build. For businesses that are, have a high lifetime value of consumers, that make good margins, and that are quite differentiated or unique, it probably makes sense for them to build their own networks. For other businesses, which is probably the majority of businesses, that have they can't afford to pay very high customer acquisition costs, and to manage those operations, partnering will make sense. And that's where I think you will have this consolidation of services, of digital services via agents to communities and customers.
You've made some really valid points. I do believe that agent networks can be sustained with capital, definitely, in the sense of money coming in, but then also the human capital needed to ensure that agents are stationed in the most underserved regions in Africa, whether rural or slowly urbanizing. Now, with that, we've come to the end of today's episode. Thank you to everyone who's taken the time to tune in and listen. Don't forget that you can tweet at us using the hashtag #TheNextWaveCNBC. You can also send in your feedback via email to thenextwave@techabal.com. Thanks, everyone, and see you soon.